So you're basking in the glory of the Bitcoin gains, or maybe you rode Dogecoin to the moon, and now you're just about ready to go to the Bahamas on your special super luxury yacht. But then you learn the truth about crypto tax in the UK and realise that the holiday is more likely to be Blackpool in a rubber dinghy. After the unfortunate spread of the virus all around the world and people requiring lots of support on furlough and different support schemes in the UK, the Office for Budget Responsibility, which sets all of the government's finances and budgets, have said that coronavirus is going to cost around £355 billion to £400 billion. And Rishi has been getting busy trying to work out how to recoup some of this money back into the UK economy and reduce all of that borrowing. And with cryptocurrency having a market cap of over $2.1 trillion, it's definitely a huge area of interest of HMRC to start taxing people and gain some more profits back. There are lots of myths about crypto tax in the UK, and I'm not an accredited professional, so definitely talk to an accountant, but HMRC have just launched a brand new guide on their website looking at everything in detail, and I'll leave a link in the description to check this out in more detail. Her Majesty's Revenue and Customs is cracking down on crypto tax avoiders, with a recent press release from UHY Hacker Young stating, "While criminals can still choose not to declare these assets, doing so gives HMRC another opportunity to bring criminal charges against them if their forensic work finds a hidden Bitcoin wallet. A defense of ignorance of the law in this booming sector will no longer wash with the taxman." Some people might be crazy enough to think that crypto profits in the UK aren't taxable because the profits and gains are similar to gambling or lottery winnings, and that is simply not true. The sale and profit of crypto assets is known as capital gains and capital gains tax. Now, if you're new to the world of finance, what a capital gain is that when you have an asset that appreciates in value and then you sell that particular asset, you pay tax on the difference, which is essentially the profit of what you bought it at versus what you sold it at. And of course, you can't have nice things without having to pay tax on everything in the UK. So you then have to file for self-assessment and make sure that everything is filed on time to avoid any fees, penalties, or possible imprisonment. And also be aware that if you fail to properly report the amount of profits that you have, big platforms like Coinbase share data with HMRC regularly if all of your holdings are over £5,000, which means that HMRC will know that you're not properly stating your taxes and they will come after you. Coinbase sent out this email to a lot of users earlier in the year, and this essentially states that Coinbase is now sharing data with HMRC. The letter essentially says that if you've been a little bit naughty and you've not been paying your taxes on crypto gains, then now is the time, and if you haven't done so in previous years, then you can fill in their digital disclosure service, which essentially is your way of putting your hands up saying, "I'm sorry, I did it wrong, and I'm willing to fess up and say that yes, I have all these profits and pay my taxes," to wipe all of your tax affairs to be nice and honest and clean on a brand new clean slate. Now, there is a debate whether it's trading income or whether it's capital gains, and the difference here is that if you are an individual doing a lot of small trades or personal investments, then you will pay what is known as capital gains tax. If you are a business and you are trading high volumes of crypto, then that can be looked into as a trading business, and therefore your taxes will be different. But for the average people like you and me on this video, you're more likely to be looking at capital gains tax as a personal investment. There are, however, allowances and also different tax rates depending what you earn in a single year. The tax-free allowance for capital gains is currently £12,300, meaning you can earn this before you have to start paying tax on all of your capital profits. And generally speaking, disposal is what triggers the taxes in the eyes of HMRC. Disposal is a broad term that covers 4 key areas in the crypto world. Rule number 1 is that until you actually sell your cryptocurrency assets, you don't have to pay any tax. So if you bought Bitcoin many years ago and you're still sat on the exact same amount of Bitcoin that you bought, and it's worth £50,000 more than what it was, you don't have to pay any tax on that £50,000 until you start to sell the Bitcoin. So you can keep on holding as long as you want to before you then have to start paying money. Or you could be wise and start selling a little bit off every single year within your capital gains allowance. Rule number 2 is that if you convert your gains in cryptocurrency into another cryptocurrency, so for example, if I had £10,000 in Bitcoin and it was now worth 15,000, and I used the £5,000 profit to buy Dogecoin, you still have to pay taxes on that £5,000 that you've used to convert. So even though you've not technically sold it, you've still sold the Bitcoin to gain the Dogecoin in that transaction, and that classes as disposal, which is taxable. Rule number 3, if you purchase any product or service with Bitcoin, that is still classed as disposal as well, meaning you'll have to pay tax on that. So if you have loads of Bitcoin spare and you want to buy yourself a Tesla, by doing that, you're disposing your Bitcoin profits, and you'll not only have a Tesla, but also a big tax bill to pay at the same time. And rule number 4, if you was to gift any crypto assets to a friend that you have gained, then then that is also taxable as well. I have no idea why you'd want to send any of your friends money in the first place, but who knows. Interestingly, HMRC don't treat crypto assets as a particular currency or money, but they do categorize it into 4 main areas. The first is exchange tokens. These are used to make payments, for example, Bitcoin. Second is utility tokens, which provide the holder with the right to access a good or service. Third is security tokens, which gives the holder the right to profit and loss in a business venture, for example. And then fourth are the stable coins, which are coins that are pegged to another asset with a stable value, such as precious metals or gold. Although all of these definitions are different, the tax treatment differs depending on how you're using each of these coins, so it is somewhat subjective. So let's say that you've made some gains and you're above the tax-free allowance and you need to start paying tax on your crypto gains. Well, if you're a basic rate taxpayer, that is going to be 10% tax, not the end of the world, or if you're a higher rate taxpayer, you'll be paying 20% tax on all of those capital gains. Another thing to consider is bringing losses forward. Now, this is a business term that is used quite a lot. So what you can do is that if you make a loss on your cryptocurrency assets in one particular year, so let's say that you lost £5,000 in 2020, you could carry those losses forward into future years up to 4 years from the year that you made the loss. So if you made the loss in 2020, then you could carry that forward at any point up until 2024. This means that if you made £5,000 profit this year, you could wipe out all of those profits from last year, meaning that you'd pay no tax. And lastly, I want to cover mining. Now, mining is different but also interesting. So if you're mining away and you're lucky enough to get yourself Bitcoin, let's say that the Bitcoin was worth £50,000 at the time that you got it. Thankfully, you don't have to pay tax on that entire price of the Bitcoin itself. So let's say that it was worth £50,000 and then you held onto it. The £50,000 is then the base price that you have that coin for. If you then sold it for £60,000, your capital gain is just that £10,000 increase between the 50k when you mined it and the 60k when you sold it. You still have to declare the price of the coin in the first place as miscellaneous income, and they are both taxed completely differently. So that original 50k is one separate tax, which is income or miscellaneous income, and then the other £10,000 that is capital gains is taxed in your CGT allowance or your CGT taxes. I hope you found this video useful. I've got loads of other great videos on the channel like this one on the top here, which is my deep dive into why I think SafeMoon is very, very risky. Or you can check out the one on the bottom, which is my deep dive into the history and story of Dogecoin. So feel free to choose one of these, and I'll see you on the other side.